Good morning. I hope everybody had a wonderful weekend and we're heading into this Thanksgiving shortened weekend, obviously. And seems like Santa Claus is coming to town. We'll talk about that. Um, so as you can see, quick, just where we are, and then we'll do a little recap of last week, then we'll see where we're going. Okay, so we gapped up in the overnight session to roughly where we are now, 66.50 round number. Friday higher day-ish. Actually, Friday higher day was a little higher. I'm always ish. I'm always ish. I don't draw my lines with like a fine-tooth mechanical pencil. They're crayons. They're with a paintbrush roller, not with like an artist's fine. They're areas. Some people like 67, 53 and 22 cents. That's fine. That doesn't work for me. That's not how my brain works. Um, so we're at the 67.50 round number. Uh, we kind of played the range we would expect to play overnight. I mean, this is the levels I mapped out based on gamma yesterday, even before the market opened, and we just kind of stayed within within this little range here, and we'll look at the gamma structure to see where we got that from. So this was the top of the expected move before I wrote this, like the final draft at around 6:30. And so actually this was from last night, the expected move. So really now the expected move is kind of going to be somewhere up here. But this is still going to be a sticky top zone, and we'll talk about that in a minute. Now, I don't know where Chewy is or Vol Trader. Everybody was going to be here today, but I don't know, they're not. Okay. Hey, is anybody here on YouTube or on Twitter or anything? I'm seeing I'm not seeing any comments. Not that they ever stopped me from talking before. Okay, Israel. Okay, the gang's all here. Okay. All right, good. Everybody's here. Okay. Thank you. Also, while you guys are there, you can like, retweet, recomment, share, all that kind of good stuff. I would appreciate it. Anyway, so let's get to what's going on. And we might take a few, okay, wait, let me, before I do that, let's get, okay, yeah, we can do it from here. So where are we? And somebody asked me, where does, good morning, everybody. Not everybody's here. Thank you. That feels better. Maybe I'm old fashioned. I like the hi, good morning, how are you? All that stuff. I like that stuff. So somebody asked me where gamma flips or where the gamma zero is. And really, that's like an oversimplified concept that maybe I don't want to sound cynical, that gamma service marketers try to sell people to make it sound simple, or maybe it's just an oversimplified lack of sophistication, understanding. But gamma is never zero. There's always, if gamma is options positioning, there's always options positions. That said, um, if we just, there are areas where we flip zones positive to negative locally, as in near where we are now. I have my local pizza place 2 miles away, or versus bigger picture where there's big clusters. And we can look at that a little later too, if I have time. So here we are, 6,600, 66.20. This is kind of where we chopped most of the overnight section, but we pretty much held above the 6620. And right now we're right in this zone. So what do these lines mean? I'll do the little review that I always do. This is where market makers are short gamma, short options. Let's just make it even simpler. Here, where market makers are short options. That means customers bought them. You and me and hedge funds and everybody else are customers. So customers are long these options. So market makers sold it to them. They're short. What does that mean? That means, and I'm assuming that if you're watching the show, you know something about gamma. You've heard about it. Uh, it means market makers are hedging in the direction of the move. Even if you haven't heard about it, you just want a plan that works because this is a plan that works. That means that we're going to accelerate into this area. Market makers have to buy into this area, but the numbers are small. You know, nets out 500 contracts, 500 contracts. So this can easily get swallowed up by intraday flow opening, a couple thousand contracts come in by an institution and the roadmap changes somewhat. But these tend to stay. They tend to stay. And so we have this ladder up pulling us up. And if we can get over 50, 55 round number ish, which was the expected move on Friday, I believe, and there's different ways to look at the expected move. Some like to look at the close the day before, some at the open, some whatever. I like to keep looking at it throughout the day, see how the straddle is decaying or moving. But if we can get over here, 50, 55, then 66, 75 round number, no shock. We got some, you know, buyer interest here. Looks like 5 wide debit spread was cheap as shit, technical term, on Friday. So that might be paying, but it's small. What's the biggest feature on the map? 6,700 calls, 4,000. So somebody loaded up on these calls for whatever reason. I don't care why, I don't care who, I don't care if it's one somebody or 10 somebodies. There they are. Yeah. It takes a while to wrap your head around it. And the basic idea is market makers short gamma, customers long gamma. We accelerate into the move and then stall and go the opposite direction. And positive gamma is reverse. So let's just look at the positive gamma here, where market makers are long gamma because customers sold options. So as we move down toward this, market makers have to buy to balance out their exposure. But if we move away too far, now they're too long, they have to sell, sucking us back toward that number. Now that's one in isolation. When you have this whole soup, it becomes a big, fancy Greek dance with everybody like dancing and having different influences. And you just kind of have to, kind of see where the balance points are or whatever. So now let's talk about this. This is the biggest bar, so that clearly means something. And let's just talk about this in isolation in a hypothetical. Let's just say hypothetically, we're doing a little teaching, not road mapping, but I've always enjoyed teaching. I taught college, I taught graduate school, I've done educational seminars as a psychologist. In the personal growth groups that I'm involved in, I tend to be a speaker. Um, so yeah, I like teaching. I like that, and I also learn a lot from it myself. So anyway, back to while you're listening, you don't want to hear the doc story. You want to make money. So 60. So let's just pretend that we're up here. This becomes a magnet up and we get attracted to it. Now let's just say we get up toward it and we're over here, 67, 80, 85, kind of pulling up toward it, assuming nothing changes. Then the end of the day starts coming. These options start decaying. If you ever bought an option that accelerated but was still out of the money, a convex play, and then price could even stand still, doesn't even have to go down. The option starts to lose value, especially if it's the last day of trading. And then as it loses value, guess what? Market makers sell their long hedges that they bought into the acceleration. So this becomes a push down the closer to the end of the day and the closer we are to it. So this is a potential source of acceleration and decay. And so let's just pretend we were here at the end of the day, a little bit like over here. Then this would decay down, and the positive would attract us, and we might end up over here, et cetera, depending where we are, depending what the bars are at the end of the day. So you have to think of these as accelerators up and decelerators or whatever you want to call it, on the way down, and these are brakes. There's my girl. Thank you. Thank you. I need to see 50 people do that. Thank you. Okay, I'm getting some reposts. There you go. Thank you, folks. I hate to have to ask, but apparently I have to ask. And this is all thin. This is all thin. Now let's get to the OMG thing. If we break 6620, kind of like where we kind of chopped in most of the overnight session, then we broke out a little bit. We have this negative, so we have this acceleration zone from 25 down to 600 in both directions. These are two-way highways. Highway up, you get here, then highway down, you get here, highway back up. These are two-way highways, and nicely framed by this 6625. So if we should stall out and fail, whatever, a 6620, 6600, 6610 fly would probably be cheap to buy now. And if we got a pullback, even down to 10-point pullback or so, might be a nice little scalp. So before I forget, I'm gonna go there right now and see what that price set out. It's just kind of you're watching my. So let's just see what a put fly trying to capitalize on that would look like. Oh, look, and we happen to be right there. So I said 20, 10. That's cheap for 40 cents. I'll take one. Oh, come on, bro. Keep changing the price on me. All right, 45. It's a deal. Okay. Am I expecting that to make me a fortune? No. I mean, maybe it could if we start falling down, but I know that these things travel well. I don't mind throwing out 45 bucks, although it's not going to be zero anyway. And these things have a way of kind of working themselves out at the end of the day. So this was an iron condor I sold Friday at the end of the day, just based on the expected move Friday, going whatever little formula I like to use. And this is a 5 wide, a conservative one. I got about about a fifth the width of the spread, $1 for a 5 wide. You could go even. It depends on how you like to do it. I'm not going to. Let's look at the calls while we're at it. While we're in Flyland, and let's move the strikes up. So we know we have that acceleration zone. I mean, the main, we're probably going to end up in here. But let's just say we want to, if we can get an acceleration towards 75 but not get to it. Let's see what that looks like. Let's see, it's probably going to be so expensive. That's not bad for 65, man. They just back the price on me. Quantity, I want one, excuse me. I want the low price, 65 cents. All right, 60 cents. Let's take that one. Okay. So these are lottos. These are lottos. When the day opens, I might try a more serious one. I might try a more serious one. Oh, there they are. File Trader and Chewy are here. Good afternoon, people.
Good
Hey, how
afternoon.
you doing? Good afternoon.
Okay. So
Is it good afternoon? No, it's morning. Why are you saying
it's
good
more
afternoon?
because you guys got to the office late.
Oh, okay, right.
I'm being cute. I'm being cute.
No, you're
Oh,
right. You're right.
okay. So anyway,
I
here
did
we
actually.
are.
I did. So true.
Okay. Yeah, it's afternoon where you are. You're like in some foreign land.
Yeah, but I did come in late.
Okay. And so getting back to the roadmap, let me I've been kind of jumping around like a butterfly a little bit. And I was doing butterfly spread. So there's some kind of Taoist wisdom in that. Below 6,600, 6,620, this is the chop area. And I noticed Vol Trader, you had something similar. Um, we have the air pocket. So if this breaks, there's really no gamma here to support us or do anything. And we have some customer longs that are market makers short that are probably, well, that was kind of the old breakdown area that we kind of battled with last week for a while. So it makes sense that people are there. Let me go to depth view and then we'll switch gears to Chewy real quick, and then Vol Trader will do his shtick. And Vol Trader, Chewy and Vol Trader both going to give you directional ideas. I'm giving you if then. I have no direction. I'm go with the flow and keeping with my Eastern orientation to life. And you see here, here's that 6620, 6600. So we have 1,000 contracts in that kind of supported zone, kind of over that 2030 area where we kind of played around overnight. There's a thin acceleration zone up toward right near the numbers are, but these numbers are small, 225. So don't get it twisted. Things can change a lot. The big deal is this, the 6,700. So while I'm thinking about it, let's take a quick look at what the delta is up there. 14 delta. Not huge. You'd like to see a 20 delta, like the 75. These deltas up here matter more from a hedging perspective, but the size of this 4,000 puts this in play as a candidate as we go up. There's going to have to be buying for this too. But as we go down a stall and as these decay, there's going to have to be selling for this. Sorry, you have to think in multiple dimensions here.
That's called option trading, isn't it?
It's called option trading, right? That's why we trade options. If you
Yeah,
want to trade individual stocks, that's fine. And if you want to trade futures, that's fine. It's Delta 1. But if you're using this as a roadmap, a 0DTE roadmap, then try to keep that in mind, or not just rely on what I said in my roadmap, but try to understand what's behind it, the ghost behind the machine.
Yeah.
And then down here below 6,600, there's nothing. So from a gamma point of view, this is my egg, so to speak. There's just nothing there. There's just nothing there. So it's thin, and we have these snipers, these bandits, these landmines over here. Let's check out their delta, right? What's good for the goose is good for the gander. What's their delta down there? 13, 15, 10. A little low, but between the two of them, you have a tag team over here. Between the two of them, between Frick and Frack, we have what, 16, 12, 3,000-ish. That's enough to matter, especially if we come down. So these are the gonna matter, probably not get to them, and there are frenemies. There are enemies if we're just, let's say, if we're long and we're heading in this way. But then there are friends once we stall, and then market makers have to buy back whatever shorts they have in relation to it. Okay. I'm going to put the chart up. I'm going to let Chewy go first. And then Vol Trader will speak. I'm going to be trying to fill out the show, for lack of a better term, somewhat with more people. Just try to get some interest on here. I'm not sure what that was. Yeah. Ready for you. Let me just get E-mini up here.
Are you making coffee?
Let me get E-mini up on my screen. Scroll, forever scroll. Here we go. Okay. Now, this is, I think this is, I don't know if this is the most recent one. I don't think I updated it here. So we're just gonna fly naked. Go ahead.
All right, guys, get a pen and pencil ready. I got an interesting setup for you today. First off, the first level I'm looking at is 6650. We hold above it. I'll be looking at 6680. Very important that we cross over 6680 today.
So it's about 20-point difference. That's about 66, 60, 55. Okay, so same sort of area where we have the potential to stall on SPX. Go ahead.
Yep. If we get fine buyers under the couch there, I'm going to be looking for 6720. I'm all right skipping 6700 and going straight to 6720 as a target. Which would be 6700 SPX, give or take.
Right, round number, right. So now someone's asking a question. Then now we just flip gears to ES.
Yes.
Go ahead. I'm answering a question.
Good. I can't see the questions on my side. If 60, I really do think 6720, give or take 10 points, I think will be the top today. Once we get there, I think a proper reversal is in play. And I think if we can't hold 6720, we'll revert back easily to 6650. Now this is where it gets interesting for me.
Question: in what time frame do you see that? Because from a gamma point of view, if we're at 66, 6700-ish, give or take 5 points, and it's say 3 o'clock or 3:30, the action would be very different than if we're there and it's noon. So how do you see that time factor? I know you don't really look at time the same way as an option trader does, but how do
Correct.
you parse that?
The way I parse it is if it gets to 67.20 by 3:30, I'm not expecting the reversal until tomorrow.
Okay.
So you know, depending on how much of my game plan we see through today, some of that might change into tomorrow, some of that will hold. Just depends on what happens today. But if we move up to 67.30 pretty easily, 67.20 pretty easily into lunch, I think we see that reversal today.
Probably, I agree.
It kind of just depends what we see in the first hour. The level after we break 66.80, the level that's most important to me overall is 66.20. If we can break upside 66.80, then this one becomes true. Break below 66.20, and my eyes are set on 64.80.
So
Give it.
6620 is 6600, round number, no magic. Okay.
Yeah. I see us going down to 64, call it 64.90, and then 64.40 later in the week.
64. Wow,
Yep.
you're mean.
hmm
You're mean. So basically what he's saying is if we break, we get sucked back into that negative gamma trap. And if we just kind of look at a chart, then we start to make new lows, is what you're saying?
I do.
Okay. Well,
And
then,
again, I'm not a bear. I'm just telling you what I'm seeing in front of me. And I think that could get fun into the end of the week. The way I always, OPEX was Friday. The way I always treat Mondays after OPEX is with a little bit of respect, a little bit of I don't want to say fear or timidness, but just my foot off the gas so much. I recommend you do the same.
okay.
If there's one more thing I wanted to say here. Let me remember it. Oh, 66.20 for me in my book doesn't come into play unless we can break 66.80.
What do you mean by that?
So the break of 66.20 doesn't matter to me so much until we can break 66.80.
Gotcha. So if we stay in this job zone, then it doesn't mean so much because we're kind of staying in the same consolidation range. Is that what you're saying, trader
That's
speak?
correct.
Okay.
Yep. So if you wanted to put it in layman's terms, I'm looking for a bull trap this morning. Nice push up. You get people excited that we're going to continue the rally from Friday, and then switch it up mid-session. That's kind of what I have
Gotcha.
on deck. Yeah.
Got you. Good perspective. Okay. Now we have this much promised special that we're gonna. I think we put some of it out on social media, and we're gonna email it out to Substack and WHOP and Elemental P and everybody else. Do we have that link handy? Do we
Yeah.
have like a final version, or will we get it out there a little later today? What's the story with that?
I can send you a copy paste message for right now.
Okay. Copy paste message coming. So while the copy paste message is coming, I'm going to switch gears to Vol Trader.
Okay, so first of all, I think what he said is spot on. Like the setup is really ripe for a bull trap. I don't know if that will actually unfold, but it's set up for that. So like suck in more buyers to get like a real down leg, especially if we break SPX 6600. I think it becomes extremely negative under that, right? We lose that. Maybe we have a buffer down to 66, 65, 75. So those 25 points, in my eyes, very crucial. So market might, dump under 6,600, and there's 25 points there that it can generate a lot of selling, but not necessarily push more, and then reclaim the 6,600. That's a scenario that could happen.
I see that
But
as a very likely scenario too. Okay.
yeah, there's a pocket there, pocket of air between 6,600 and 6,575. But if we go straight down and we just, we're unable to reclaim the 6,600 by the end of the session, we go through and start probing that 6,575, and it gets very negative. Now, important to notice that there's a huge spike in at the money volatility and in the skew. So the whole surface went up from Friday, right? I mean, think about it. We basically opened around the same numbers, right? Let's say we closed Friday 66.20 or so, I think was the close, or 66.10, right? So give or take 20 points.
We closed 66.02 on Friday.
That's the CBOE formal thing, settlement. Okay. So in my eyes, we are pretty much the same within the range of the previous day.
Yeah, we're in range. Yeah.
Within the upper range of the previous day, but the whole skew went up dramatically up. So I can send you here. You can post it. Just a second, just to give
Now,
you the.
I don't know if you can see my screen, but I'm showing the folks. I'm zooming in on VOLI. VOLI is Nathan's index at the money volatility. A quick, easy, down and dirty way to see what that is. It's not like, to the penny. We were chatting about that over the weekend. Yeah, on Saturday and Sunday,
So what
we
are
talk
you
about
seeing
this
in volley?
bullshit.
What are you seeing in volley?
Yeah, I'm showing VOLI, yeah.
No, but what are you seeing there? How much did it go up in your eyes?
Well, it doesn't populate. So it just gives me Friday. And, the Friday close, if we, it looks like so from Thursday, it kind of acted kind of funny. It went from 19 up to 22 and then back down to 20. And that's kind of where it is now.
Yeah, so I don't think that portrays the bearishness at all. Like my model went up at the money, went up 5 points in terms of volley and stuff like that. So it's very, very bearish actually. What's the way they shifted. Now, important to remember, the Friday market tends to sell the overnight volatility, so it always depresses the Monday. When you're in Friday, you look at Monday, you see 14, and Friday can be 27, right? So that's a natural way. And then what they do is, right off the start of the Globex, they start to pump the volatility to basically offset the theta. That's how the mechanism works, but it's okay. And so the bump, you can't take the whole bump of the volatility of the skew, but you can take about between a third and 50% of the difference between how November 24 skew closed on November 21 versus what it is now. So on my model, we basically bumped up a couple of points, which is very negative in my eyes. And we have some pressure into the puts, say, 6,600, 6,580. You have a bid there right now on the skew, on the put wing right now. So
you're saying right now, live, real time, you're looking at that.
Yeah.
Okay.
Yeah, because I've been selling around that, some butterflies. Now that we are 50 points up. Sorry, first of all, I'm looking at the ES, but it doesn't matter. It's the same. So you have, in terms of SPX, that would be around 65.80. So you have a clear bid there. Just buying.
I'm guessing the 65.80 is going to be what, a 25 delta, just knowing how these people operate.
tell you exactly. So it's around, well, it's actually around 30.
Okay,
So between
close
30 and
enough.
25,
Right.
between 30 and, let's see exactly. So, no, sorry, you're right. 25 delta. Yeah, 25
See
delta.
that? That's
So,
quantuition. That's quantuition. I need to look at the numbers. Go
yeah,
ahead.
so there clearly is a bit to the downside on the zero DTE, which is a bit strange because let's say they sold those puts and they're buying it back, then why would you rush doing it already during Globex when you're paying the maximum premium before the theta kicks in, right? And the reason for that would be, you're in a rush. You want both to take the money and run, but also to buy some protection because you might think that the 6600 will fail today, right? That's why. So um, in that sense, if eventually they crush the vol, right? So the market will just either hold and go up, and there will be a very large unwinding there on the put side, which will propel the market. But as long
So
as
there's
that
still
doesn't
a
happen,
45-point expected move priced in now, even with all this, even with this move up, the expected move priced in brings us right back down to 6,600, and that's where we get that danger zone again.
yeah. Now, if you look at if you could open the trading view chart, SPX 30 minutes.
30
Do that.
minutes, okay. Let me
Okay,
put it on
15
30
minutes.
minutes.
Fine, fine,
Let me
fine.
put it on
15 is
30
fine.
minutes. That's fine. That's fine.
You can see a clear technical line at 65.80, where it was resistance before the open of Friday, and then they tagged it one time from the from above. Yeah,
Yep,
and
right
that's
here.
it. So you have like a clear level which was tagged from both ways. So
Right.
that is equivalent to what I previously said, 65.75, right? So we have that level between 6660, sorry, 6600 SPX down to 6580. We can see it also from a technical analysis perspective. Not that I care about that too much, but it's a good way of visualizing stuff. So obviously, just by looking at the chart, and a lot of people are influenced by technical analysis, if that pivot at the 6580 would give way, you'd get a lot of selling anyways, momentum, uncles, all that shit. And you'll have a very large portion of the zero DTE being hedged downwards because of what you showed before with those market maker positions or that thing you showed before.
Yeah, that's the whole thin setup down here.
Yeah. Now, let me show you how I map it. I'll try not to overlap what you and what you guys talked about, right? But it's so obvious that it's hard not to. So 1 second.
Okay. And where are you
One
going to put
second.
this?
I'm
You
gonna
can
put it in
screen share,
the.
I don't know if you have
No, the issue is that the whole systems are on another computer, which has that
gotcha.
Bluetooth
Okay, yeah.
issues
I'm on, yeah,
ever
yeah. I'm
since
on a few computers
Microsoft
too.
did
Got you.
that
Okay.
upgrade. Yeah. 1 second.
Yeah. Oh yeah, we talked about that. Yeah.
Let me post it here to you and you'll share it. Just a second. So
So just FYI, while he's getting it ready, if you guys like this obscure babble used to go on with me, him, and a few other traders, like all day, every day for for months. I
okay.
don't know. Yeah. Go ahead.
Yeah. So I have two things to show. First, we'll show that chart at the bottom for the SPX market maker position as I map them. I send it to
Hold
you
on.
so you can
Hold on.
share
Let me.
that.
Yeah. Let me find it.
Yeah.
So
The bottom one. The bottom one.
the bottom one.
I just,
Okay. Let me
just
open that
yeah.
up. There it is. Okay.
So I did it. I did it like very woke style with a lot of colors, so it would be very clear, right? So the way I map it, I have my own mechanism of matching the trades and trying to follow through the positions and stuff, like everybody else. But you can clearly
Well,
see
not like
that.
everybody else. I buy it from options depth or whoever. Vol Trader
Well,
actually
well,
gets the data himself and whatever has
does the
computer
matching.
programs, whatever, does all this bullshit. Yeah.
Yeah. So, but eventually, we all look at the same stuff. But one thing is
Right.
very clear. So the black bars are significant hedging strikes or zones, right? And the green and red obviously calls and puts. Now you can see that from 6,600 there are no calls, only puts. That's way no going to the left towards the puts. You can see there are
Oh
no
yeah, yeah,
blue
yeah,
stripe.
yeah, yeah, yeah. That's my air
Yeah, there are
pocket.
no
Yep.
calls. So in my eyes, and this is how I mapped the trades, there's only downside hedging here, right? So it's an acceleration with a tilting up skew, which is the blue line going up. The blue line, the one that,
Oh, okay.
yeah, that's like the skew
Oh, this
overlay.
is skew. Okay, this is
Um,
a skew. Okay.
yeah. So now the skew could have been just as well sloping down, meaning that they still have those puts short, but as the market goes down, the vol goes down also. But this is not the case. So this is the worst scenario that could be. And the whole thing starts at 65.75, right? From there, it's only full selling programs hedging those puts.
Right.
Now, from 6,600 to the call side, right, to going up, so we can see, yeah, that hurdle is there, the 66.50 on the way. You can see it. And from there, it's pretty much clear to go up. And as he said, could go up, 66.80, maybe 6,700, whatever. Now, from the 6,700 and onward, um, those are actually customer positions which are hedging the upside, meaning they are short up to
Right.
6,700 and they want to buy. That's like their stop loss type of right positions. So all in all, I mean, we could stay within the 6,700, 6,600. That would be the best case scenario and just let the vol come down and the theta come down. I would like that for sure. But if we start churning through the 6,600 and dropping, that could get messy. People are they have a strong want that the market will stabilize and bounce. So that's like you said, it could be a classic bear trap under those conditions. Now, that's the portion of the SPX, OI, and all that. Now let's look at the other chart, that one just above that I have. Yeah, that one.
Then
Now
then I
that,
want to pull up one other chart and get your take on it. Then we're gonna have to wrap it up. Go ahead.
okay, so this came off of X on the weekend. This is showing insiders buying and selling, right, of SPX stocks. So there's a lot of versions for this. There's a lot of sites out there doing the compounding of the SEC reports, and then they come up and show the total between buys and sell. But let's say Fidelity knows what they're doing for sure, and they're clearly showing. If you look at the right side of the chart at the bottom, they are clearly showing we are hitting highs we haven't hit for a very long time of insider selling, meaning CEOs,
Oh,
CFOs.
this is selling over here. Okay, not buying.
No,
Okay.
this is net. This is net between
Oh,
buying
net.
and
Okay,
selling.
so net is negative. Okay.
Right. So the that that chart, I think, speaks of the current times. I think the smart money, big money, sovereign funds, insiders, very rich people all around the world decided that the narrative for now is done. They want their money. And until either the Fed doesn't cut aggressively or Trump doesn't do something about this depreciation of all the infrastructure and Michael Burry, is pumping, people cannot just disregard that, right? So there's a lot of bearish psychology coming in now. The nice guy Rick from Charles Schwab Network, he's I think the best financial anchor out there. He came out with a fucking video saying that the Bitcoin is like pyramid scheme.
Well,
So
Bitcoin, forget whether it's a pyramid scheme or not. Let me throw in my 2 cents on Bitcoin. We have
yeah,
CTAs, trend following funds, they'll also allocate to Bitcoin as part of their trend following. Only
Yeah.
Bitcoin is leveraged, whatever, 100 to 1, 1,000 to 1, whatever the numbers are. And so
Okay.
the leverage is crazy. And so you're getting margin calls, you're getting CTAs. Just forget margin calls. They have to deleverage really fast. You're having people, I'm assuming, that they have a balanced book of of Bitcoin and E-mini and whatever else they have in there. And they're going to have to sell to balance that out. So Bitcoin stopping this big ass drop would also be helpful in that big flow picture.
Okay.
Did you follow what I'm
Well,
saying?
yes, but what I said is, I mean that obviously what you just said is the essence, right, of stuff of how things would work out or balance out. But what I'm trying to say is that the the trading or the investor community globally is now bombarded with very bearish, and not just bearish saying, hey, this is 2000 1999. No, Michael Burry comes out with clear facts showing it's a fucking financial bubble there. This guy
This
comes
the
out.
same Michael Burry that had closed down his hedge fund because of too many
Yeah,
redemptions because he was losing money. Okay.
I would not
yeah.
listen to Michael Burry.
Well,
So
it's
Chewy, can you address this real quick? We got somebody said he's trying to join it, but it says 595 annual, it says 49 a month, whatever. Can you walk him through?
So it's, if you do the math, it comes out to $49 a month. We've discounted the annual subscription, but it's if you were to pay monthly, which you can't, you have to pay for the annual. It's $49 a month.
And now we're trying to get it so you can pay monthly. I have to do a few clicks and we might be able to figure that out. But that's kind of where we are right now.
But I don't think we'll get approved for that financing until after the promo, Doc. So
Okay.
just a quick word on like the bearish side of Bitcoin and all that stuff. It's just all that stuff. Last year I was the same way, and I missed out on a bunch of good opportunities. I think all that stuff's like really cool to think about and to have in your time capsule. But at the end of the day, you got to trade what's in front of you, because at the end it just they'll beat you to it. And if you're kind of right, but if your timing's wrong, it just won't matter. That's kind of my
well, I totally agree, and I don't
I
trade
agree too.
Bitcoin.
I agree too.
Never,
Yeah.
never did trade Bitcoin. I actually bought IBIT, I think,
Yeah. I have IBIT too. Yeah.
last week. That's it. But I don't really care about that. But I know a lot of people do. Like in the
yeah,
U.S.,
right.
everybody's like crazy about
I
this
only care about
Bitcoin.
it from the flows perspective and how it's going to impact SPX for the next week or two. That's really all I care about. I'm the same. I added some IBIT. I've been adding it, ETHA, whatever. I don't buy the thing. I buy the ETF, and it's put away and forget about it. It's going to be fine.
And
I think that the world is like the big money. They're not in and out so fast like us. And right
correct.
now, the information which is more bearish is much more pronounced in the landscape than anything bullish. So I think that is why we'll keep seeing VIX or whatever. I don't use VIX, but the implied volatility being bid, and it will hamper the market from recovering until we don't get something very aggressive by either the Fed, some type of statement, clear statement. You also had on the weekend somebody, I think it was Antropy, that guy from Antropy that got money from Nvidia and Microsoft. He came out and said, 10%, 20% of the workforce is going to be fired next year. Like this guy, he knows what he's talking about, right? So there's a lot of implications that are now much more bearish in the eyes of long-term investors than bullish. That's what is drawing the attention right now, regardless of what we think about it.
Okay, let me bring us back to
And
to,
then if I can just one
go ahead, and then
real quick,
if you
and I
guys
know
think
we
it's
gotta go.
interesting, maybe we'll do like just a shoot the shit kind of webinar one day. Go ahead.
The last thing I'll say is, and really this isn't trying to make things political, is I believe, and I'm not arguing with you necessarily, but just the stance that we don't understand what a deregulatory market is going to do. And I think we haven't started to see the deregulation that Trump's going to offer. And I
Where
think,
in the cryptocurrency, you mean?
and yeah, and specifically with the Fed. So I think if we start deregulating how the way they're threatening to, I think the markets, can hold off a recession for quite some time.
Okay,
Recession,
we'll
pullback,
stop. Okay, and
whatever.
there's interesting points there. We're going to save this discussion. Maybe we'll do a special webinar one day.
Good luck,
I
everybody.
wasn't trying to lift the macro issue. I was just trying to provide
It's
some
fun though.
explanation towards the IV bid.
Okay, anyway,
always fun.
let me refocus us. Vol Trader, I want to pull your attention to this chart. You're
Okay.
Vol Trader. I don't know if you can see this chart here. I hope
Yeah,
you
I
can.
can see. I can see.
Okay,
I
so
don't quite understand the
okay,
date period.
I'll give you the quick down and dirty. So this is McClellan, McClellan, Mr. McClellan Oscillator, the son of the original.
Yes.
So this is an interesting chart, and I did a deep dive. I even ran some stats on it. I doctorate is in psychology, and I was pretty good at stats. So I ran some binomial, whatever, on it. Grok ran it. I just told Grok what to run, and it's valid. So the long story short, this is this percent spread from the highest VIX futures contract, whatever that was. I think it goes out 6 months to June or whatever it is, and
Okay.
spot VIX.
Okay.
And when spot VIX is trading this much above, well, the percentage difference is this
Oh,
low,
the container. Okay.
okay, that's extreme, and we're bouncing back.
Yeah.
You saw when we were here, we bounced back. You saw,
Yeah.
now we're like, this is, pretty crazy extreme over here.
Yeah. Yeah, but obviously that was a special occasion on April, so we don't.
Right. So if we get April out of the equation, we look at normal times.
Yeah.
When we were
Anything
down
negative.
here, we bounced. When we were down
anything
here, we
negative,
bounced.
anything- I agree. Yeah, it looks
Right.
like it. Yeah.
Right. So this
But we
looks
need a
like
narrative.
we're going to bounce.
Yeah, I agree, but we still need like a manipulation through the news to bump up the confidence of everybody, and then they'll start FOMO chasing everything, right?
Yeah, I mean, where that comes from, I don't really care. What this tells me is that this is going to decay out somehow. Maybe just time. Maybe just time.
Yeah, could be, but I agree. This is much more bullish than bearish for sure.
Yeah. And so, anyway, it's 6:23, so we've gone over. Okay. Oh, the yen carry trade. That's another story, and you're right. Which is why when we get into the macro weeds,
I can't contribute too much about that, honestly. Or the yen carrying stuff.
Yeah, that's all. That's a whole nother. And so we get into this web of interconnectivity. Now we're going back to my Zen roots. This web of interconnectivity. I'm also going into Taleb anti-fragile, where we have all these interconnecting webs and different stakeholders, different interests. The sovereign wealth fund of Japan or whatever, and the high frequency trader that's trading in Idaho have different are looking at different pieces of the elephant, and so it's our job to try to make money today or next week or Santa Claus rally, or are we getting coal or are we getting presents?
Yeah.
Okay. Great discussion.
Yeah.
Great discussion. Thanks everybody for hanging out. Thanks, Vol Trader, for coming. We went over, but that's usual. I'm famous for going over. And
Was
see,
interesting. What is the name of the individual that was here with us? I forgot his name.
Chewy,
Chewy is his name. That's it.
Chewy, yeah,
That's how we
Bread
call it.
Hombre is his Twitter name. Jesus, I think, is his given name, and Chewy is sort of the Latin nickname for Jesus.
Okay. Okay. That was a good good analysis. Anyway, thank you very much.
Thank
See you
you for
tomorrow.
coming along, and we're going to be reorganizing the server, and Vol Trader will have a channel where he'll put in some of his charts and whatever. We're trying to just sort of broaden out the scope of what we offer. So if you like it, great, and I'll try and figure out how to get the $49.95 thing worked out. Danny, DM me in Discord, and I'll figure out how to work something out for you if the 49.9 if the yearly number is too much. So just some people just want to pay monthly, and we'll figure that out too. Okay, take care, everybody. I know Danny's been like a loyal viewer here for ever. Danny Mitchell on Twitter. Is that okay? All right, I'm gonna go. And okay, I got 4 minutes to start trading. Take care.
Bye.